According to recent research, it's highly likely that Tesla stock will reach 400 this summer. However, before we jump to conclusions, it's important to investigate and determine if this information holds any merit, or if it's simply based on speculation. Tonight, we'll dive into the charts with the guidance of Larry Williams, a legendary technician and market historian who's been around for a while. Tesla has been on a roller coaster ride, and finally is showing some promising progress. This makes investors question if this upward trend being a specialist in the area for longer than I've been able to drive. Let's hear what he has to say. However, before we continue, please press the like button and remember to hit the subscribe button to receive updates on new uploads of Tesla Insights. Larry is currently feeling bullish about the broader market, but let's concentrate on one particular stop. Larry has an amazing track record of correctly predicting key market movements, such as the bottom during the COVID-19 pandemic and the January rebound earlier this year. Tesla is a subject that I'm sure you'll all find fascinating. However, before we get into Larry Williams' viewpoint, let's take a closer look at him. He started with $10,000. Larry's accomplishments speak volumes about his expertise and credibility. He made an incredible $1 million in a single year by winning the 1987 World Cup Championship of Futures Trading. What's even more amazing is that his daughter Michelle won the same contest 10 years later. Elon Musk warned at Tuesday's annual meeting that Tesla would face difficulties in the coming year as a result of the weak global economy. Larry agrees with Musk, but he has a more optimistic view for Tesla stock. It's important to remember that electric vehicles and rocket science are two different things, and while Larry thinks Tesla has a lot of potential in the stock market, let's look at the charts. Larry Williams constantly examines previous mental processes to find recurrent cycles. Tesla shows both an intermediate-term cycle and a long-term cycle. One particularly notable cycle, shown in blue, spans 42 months and has a constant influence on the main highs of the stock and lows since the company's founding. For this reason, the pattern is extremely significant. Currently, the long-term cycles show a positive trend, with the line pointing steadily upward. Interestingly, towards the end of last year, Tesla's decline came to an end, perfectly aligning with historical trends, suggesting that the stock may continue to rise well into the second quarter of the following year. A seasoned industry expert, Larry tells investors not to worry about the next year and instead to take advantage of buying chances when the market is down. This approach supports the idea that the trajectory of equities is expected to stay upward for the foreseeable future, although it's crucial to use caution during notable rises. Larry indicates that it can be wise to reduce one's position during significant upswings in the stock. By doing so, you can lessen the danger of overexposure during times of high volatility. Long-term cycle analysis offers important insights into Tesla's success. Investors can position themselves to take advantage of Tesla's potential growth in the upcoming months and years by strategically taking advantage of market dips and exercising caution during notable rallies, as indicated by the long-term cycle's current upward trend and historical patterns. But before we jump to any conclusions, let's talk about the question that has been on everyone's mind. Is this upward trend a sure thing? Larry was remarkably accurate in predicting Netflix's performance, and he has a similar intuition about Tesla. He encourages investors to follow their gut feelings because they are frequently the reason why average individual investors underperform the market index by about 1.5 percentage points. Compared to passive traders who underperformed by 6.5% yearly, Trade Society records from 2000 show. When it comes to investing, the wise ones tell us to put aside our feelings and rely only on reason and data. They stress how crucial it is to take a step back and thoroughly assess the situation before making any financial decisions in the volatile and fast-paced world of stocks and investments. It's preferable to withstand a little emotional setback than to suffer large financial losses. Kramer, a perceptive person who approaches the market with a healthy dosage of skepticism, finds resonance with this viewpoint. As he learns more about the present situation surrounding Tesla, his doubts and concerns start to materialize. While some might be enthralled with the excitement surrounding the latest advancements made by the firm, Kramer is nevertheless cautious, preferring to examine the circumstances critically and logically. Not because Kramer has a personal grudge against Tesla or its founder, but rather because his approach is based on a desire for clarity and accuracy. He recognizes that relying solely on emotions can cloud judgment and potentially lead to unfavorable outcomes. By critically assessing the available information and taking into account various perspectives, He aims to make well-informed decisions that stand the test of time. Kramer examines the direction in which Tesla is heading. He is not swayed by popular opinion or fleeting trends. Instead, he seeks substantial evidence and reliable data to form his conclusions, discusses the interesting idea of the intermediate-term cycle, which has historically led to a valuation of Tesla at 80% of its current price between now and early September. Kramer finds the data intriguing and believes it presents a good possibility, even though he is unable to explain why these cycles take place or why they result in profitable contracts. In order to bolster his optimism, he cites Larry's stellar performance in dependable data as proof that there is an 80% likelihood that Tesla stock will begin a significant rally that might reach about 400 by July. Kramer shows a weekly Tesla chart that highlights an indicator created by Williams to track the purchase of mutual funds and hedge funds. Although there have been times when the indicator has not accurately predicted Tesla's short-term performance, there is still some correlation to take into account. This indicator suggests that these money managers have a history of purchasing Tesla stock just before rallies. Contrary to popular belief, they have been correcting their actions, as evidenced by their recent aggressive buying of Tesla shares over the past 4 months. Kramer concedes that professional accumulation during market falls is supported by the daily chart, which also includes the institutional money management indicator. In order to purchase additional shares of Tesla before its stock gains diminish, money managers have continuously hung onto the company during its worst times. Williams also noted that Tesla's seasonal cycle fits in well with the present circumstances. Interestingly, although the stock only increased by about 10 during that time. Kramer highlights Ross Gerber's recent trade in which he sold Tesla on April 24 and then bought it back. What catches Kramer's attention, though, is Larry Williams, who is 80 years old, and if he truly possesses exceptional trading skills, he would likely be a billionaire by now according to his website. Williams says he traded equities in 1970 and made his first $1 million. Using an investment calculator with a 14% yearly return, $1 million would have grown to $1 billion between 1970 and 2023. For an experienced trader, this amount might not seem significant. But if we raise the return to 20%, as Warren Buffett has done, the numbers become even more amazing, reaching $15 billion today. This is why I'm on a mission to find out more about them. Little information can be found with a fast search. The only notable finding is his estimated net worth, which is approximately $5 million. This begs the question: if he really has such great trading skills, why doesn't he have a fund or any tangible proof of this success? Even though he's been trading for an impressive 57 years, his website only emphasizes this fact, adding to the mystery. Despite this impressive longevity, his research does not provide any substantial proof of his accomplishments. So even though I've browsed his website, I don't feel confident enough to trust it. He may be a remarkable individual, but my basic research hasn't turned up any impressive achievements. Beyond a single example of turning $10,000 into $1 million, these accomplishments, if any, are kept out of the public eye and are not mentioned on his website or on Wikipedia. Maybe missing something important about this person, in which case I invite you to share your thoughts in the space provided below. However, at this time, I am unable to give much weight to this research. We would love to talk more with you, but we have to end the video. If you would like to see more, please like this video, subscribe to Tesla Insights, and I'll see you in our next foreign video.